Welcome to Wealth Management CPA's market recap through February of 2023. February saw stocks slide lower after posting solid gains to begin the year. Each of the benchmark indices retreated from their January totals, with the Dow falling the furthest, followed by the Global Dow, the S&P 500, the Russell 2000, and the Nasdaq. Investors saw hope in January that inflation may be waning. However, February data showed inflationary pressures reversed course and expanded. The Federal Reserve has consistently maintained that it seeks to achieve a maximum employment and hold inflation at a rate of 2%. So far in 2023, job growth has been solid, with more than 500,000 new hires, while the Consumer Price Index and the Personal Consumption Expenditures Price Index revealed increasing inflationary pressures over the previous month. Inflation has risen 5.4% since January of 2022, according to the latest PCE price index. With evidence that the economy can withstand further tightening, the Federal Reserve is likely to continue to drive interest rates higher and for a longer period of time. This, coupled with lagging corporate earnings and the Russia-Ukraine war, which is entering its second year, has caused some investors to move from risk. Several market sectors posted solid gains in February, while others lagged. Consumer discretionary and information technology increased by about 16.9% and 7.2% respectively. On the other hand, healthcare, utilities, and energy lost ground. Manufacturing activity changed little in January from the previous month. Durable goods orders declined in January after climbing in December. The Purchasing Managers' Index declined in January as weak customer demand resulted in subdued sales. Meanwhile, input costs and output charges rose at increased rates as price pressures strengthened again. Corporate earnings in the fourth quarter were generally subpar. Roughly half of the S&P 500 companies have reported above estimated earnings thus far in the fourth quarter. That is below the 5-year and 10-year averages. It is possible that fourth quarter earnings for S&P 500 companies could decline, which would mark the first time the index has reported a year-over-year decrease in earnings since the third quarter of 2020. Bond prices fell in February, driving yields higher. 10-year Treasury yields rose 39 basis points from January. During the last day of February, the yield hit 3.98%, reaching its highest level since November 2022. The 2-year Treasury yield ended the month at 4.82%. The dollar advanced against a basket of world currencies. Gold prices fell nearly $110 per ounce in February. Crude oil prices declined in February for the fourth straight month. Oil prices have fallen due to an unusually warm winter in the United States and Europe. In addition, rising inflation and interest rates have pushed against oil prices, while driving the dollar higher. The retail price of regular gasoline was $3.38 per gallon on February 20th, 11 cents less than January's price and 15 cents lower than a year ago. If you have any questions, feel free to give us a call, 801-272-4357. Again, that's 801-CPA-HELP, 801-CPA-HELP. Thanks.